It's December, which means the tax year is almost over. Before the year end closes, you may want to consider certain tax strategies to lower your taxable income, offset some capital gains, and just declutter your crypto investments. If you started getting into cryptocurrencies during the 2017 bubble, you may have a crypto portfolio of worthless altcoins, bad investments, and scams. It may hurt to see all of the losses in your portfolio, but you can take advantage of it for tax purposes. In this video, we'll talk about tax loss harvesting, where you can sell your altcoin for dollars or Bitcoin at a loss to offset any capital gains and lower your taxable income. Welcome to CPA Explains. Please note, we don't give any tax or financial advice. Everything in this video is for informational and entertainment purposes only. Please contact a tax attorney or CPA for your specific needs. In 2014, the IRS acknowledged that virtual currencies should be treated as property or capital assets. So when you sell a virtual currency, it's treated like any other capital asset. The price that you sold it for, minus the price that you paid for it, would be your capital gain or loss. The capital gain or loss on cryptocurrencies is not only realized when you sell it for US dollars, but also when you trade it for other cryptocurrencies. If you do want more detail about how Bitcoin and cryptocurrencies are taxed, please watch my video above. Before we look at an example, let's go into detail about capital losses. So capital losses can be used for two different things. One, the losses can be used to offset capital gains. And two, individuals can use those capital losses to offset $3,000 of ordinary income on their tax returns. Any additional capital losses after offsetting your capital gains and taking a $3,000 deduction against your ordinary income is then carried forward and then can be used in future years. Capital gains and losses can also be classified as short-term and long-term. Short-term capital gains and losses occur if you've owned the asset for less than 1 year, and long-term capital gains and losses occur if you've held that investment for over 1 year. At a federal level, long-term capital gains are taxed at a lower rate. So the most advantageous time to use tax loss harvesting is when you have short-term capital gains to offset. So how can we take advantage of capital losses to lower our taxable income and ultimately lower our tax bill? At the end of 2017, the cryptocurrency industry saw all-time highs. Although Bitcoin is almost back at its all-time highs, many of the other cryptocurrencies are trading much lower and have a very low chance of getting back to their trading prices from 2017. So if you sell those investments at a loss for dollars, or you trade them for Bitcoin, before the end of the year, you'll be able to capture those losses for 2020. So let's look at an example. So let's say in 2017, you bought 10,000 coins of some cryptocurrency for $3. Now in 2020, that investment is worth 50 cents per coin, so your 10,000 coins are now worth $5,000. To capture your losses, you would need to sell this investment for dollars or trade it for something else like Bitcoin. In this scenario, we're looking at a $25,000 loss. That loss can then offset any other capital gains you may have, whether it's cryptocurrency related, stock trades, or any other capital gains that you might incur. In this example, let's say you have $10,000 of capital gains related to stock sales. Your $25,000 of capital loss can offset the $10,000 of capital gains. You can also deduct up to $3,000 of ordinary income from your capital losses. Now you still have $12,000 of losses, and those can be carried forward to use in future years. In this example, at the 24% tax bracket, it equates to $3,000 of savings. This is a tax strategy used by many stock investors. Your portfolio might be full of different cryptocurrencies, and it's probably time to look through them and see which ones you should get rid of and also take some tax advantages while you're at it. Also, before making any transactions, be sure you're in a capital loss position. So that's it for this video. Hope that was helpful. If you have any questions, leave a comment below. Press the like button if you thought this was informational, and subscribe. Thank you.